Ladies and gentlemen, good day and welcome to the Signature Global India Limited Q2 FY26 earnings call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Adidev Chattopadhyay from ICICI Securities. Thank you, and over to you, sir.
Good afternoon, everyone. On behalf of ICICI Securities, I'd like to welcome everyone on the call today. From the management, we have with us Mr. Pradeep Kumar Agarwal, the Chairman and Whole-Time Director, Mr. Lalit Kumar Agarwal, the Vice Chairman and Whole-Time Director, Mr. Ravi Agarwal, the Managing Director, Mr. Devender Agarwal, the Joint Managing Director and Whole-Time Director, Mr. Rajat Kathuria, the Chief Executive Officer, Mr. Sanjeev Kumar Sharma, the Chief Financial Officer, and Ms. Pritika Singh, the Head of Investor Relations. I would now like to hand over the call to the management for their opening remarks. So, over to you. Thank you.
Yeah, thanks, Adidev. Hello, everyone. It is a pleasure to welcome you all to the Quarter 2 FY26 earnings conference call of Signature Global. We appreciate you taking the time to join us today. I trust you have had a chance to go through our results and investor presentation. I would like to start with a brief look at India's housing landscape, which continues to be a major force behind the country's economic progress. Today, real estate is a concern center stone of the economy, supporting over 200 linked industries such as cement, steel, and furnishing. The sector contributes about 8% of India's GDP and is projected by CREDAI and Colliers to become a 5 trillion to 10 trillion market by 2047, accounting for nearly 20% of GDP. It is also the second largest employer, with the housing alone expected to generate nearly 20 million new jobs by 2030. Reflecting national trends, Delhi NCR residential market remained strong, recording sales of about 62,000 units worth INR 1,530 billion in 2024 and around 26,795 units of worth INR 934 billion in the H1 25. In Gurugram, our focused micro market like Dwarka Expressway, Southern Periphery Road, or Sona continue to attract high net worth individuals or working professionals seeking modern, well-connected homes supported by robust infrastructure and rising buyer confidence. As per industry report, property prices along Dwarka Expressway have nearly doubled, with around 98% growth between 2020 and 2024. Gurugram Southern Periphery Road has also seen remarkable appreciation, with price rising by nearly 125% over the last 5 to 6 years. The Sona corridor has similarly emerged as a high growth zone, with property values increasing by about 151% in the past 5 years, driven by the infrastructure upgrade and growing residential demand. As this positive momentum continues, we at Signature Global remain committed to growth that is both responsible and future ready. Sustainability is central to our vision, guiding how we plan, build, or deliver our projects. Reinforcing this commitment, we recently raised INR 8.75 billion, which is almost $100 million through a private placement of non-convertible debenture to the International Finance Corporation, the World Bank lending arm, making Signature Global first ever listed debt transaction. The fund will be used to develop mid-income and ESG-aligned housing projects while strengthening our balance sheet through debt reducing. This partnership with IFC underscores our financial discipline and our focus on creating communities that are modern, efficient, and environmentally responsible. Our performance in the first half of current fiscal year reflects to the continued strength of our business fundamentals and the trust that customers, investors, and other stakeholders place in Signature Global. Driven by our strong performance, favorable market conditions, and a robust launch pipeline in coming quarters, we are very much confident to achieve our FY26 guidance, which includes pre-sale of INR 125 billion, revenue recognition of INR 48 billion, and steady growth across other key operating metrics. We believe our continued focus on execution, excellence, and customer trust will help us sustain this growth momentum in the quarters ahead. With that, I would now like to invite our CEO, Mr. Rajat Kathuria, to talk to you through the company financial performance. Thank you once again for being here and for your continued trust in Signature Global.
Thank you, Pradeep ji. Thanks everyone for taking out time today morning. I'll just take a bit of deep dive into some of these numbers and happy to take up any questions which you may have post that. So, during the first year, we've achieved about 46.6 billion of sales, which is a little short of 40% of our annual guidance of about 125 billion, which we do intend to achieve very positively. And as a background to the sales achievement, first I would like to talk about the launches which we've done during this half of the year. So previous year, a lot of our launches were planned during the first half, whereas for this year, some of these launches are getting drifted towards the second half of the year. But during the first half, we've launched about 2.5 odd million square foot, 2.45 to be precise, which is worth 43 billion. However, during the second half of the year, we are planning launches almost close to 8 million square foot, which will be in two of our three key markets. In Sector 37D, we plan to launch roughly 3.6 million square foot, which is within this quarter itself. And in Sector 71 on the Southern Peripheral Road, we plan to do launches in excess of 4 million square foot. The GDV potential of these launches is expected to be in the range of 13 to 14,000 crores. And once these launches are done, we comfortably meet our annual launch target, which is of 170 billion. So, quite a few launches planned during the second half, which we feel will have a very strong and a positive impact on both sales and cash flows of the company. But taking deep dive into the first half sales, we achieved about 46.6 billion, which could be broken down in two different ways. One is that we've sold roughly 3 million square foot at an average pricing of about 15,700 rupees a foot. The other metric would be that we've actually sold about 1,338 units with an average ticket price of each unit nearing 3.5 crores per unit. But the key takeaway is that during the first half, we've, all the key micro markets have contributed to these sales. So if I have to give a very broad breakup of these 1,330 odd units, roughly 500 plus units got sold in the Sona region. About 450 odd units, were sold in the Southern Peripheral Road, Sector 71 micro market. And about, 300 plus units were sold in the Dwarka Expressway market, which was mix of both in Sector 37D as well as in Sector 84, where we have the project by the name of Twin Towers. So, in effect, on sales and launches, just to reiterate, we've managed to achieve sales across key markets, and bulk of the launches are getting planned in the second half. And I can safely say that, a launch pipeline, a very advanced level launch pipeline of 8 million square foot is unparalleled. I don't think you'll see such quantum of launches coming from any large company in the micro market. Besides that, I think collections were steady. Out of our sales done till date, we've done some good collections to keep the liquidity position in the company very healthy. We've achieved total collections of about 18.6 billion for the first half of the year. Bulk of the money went into construction. Almost 47% of collections, including taxes, went into construction, and the balance, you could say, close to 25-27% gone into SG&A, brokerage and taxes. And post that, we created a free cash of about $4 billion, which was primarily spent on land and approvals, for the company. Since we are building up this massive, launch pipeline, there was money spent on both land and approvals aspect. During the year, we've also, added certain land parcels in Sona. So two key, kind of additions on the business development side. So, in the Sona market, we've added about 2.3 million square foot, which was mix of both. About 500,000 was equivalent of, development size was the acquisition. And about 1.8 million square foot was added by taking up one of our JDA partners' share in this market. So about 2.3 million square foot of area. So we sold 3 million, we've added 2.3 in the Sona market. But more importantly, as we are planning our projects in Sector 71, where we have access to about 92 acres plus land, which is mostly owned by the company. In our till recently, we've been giving guidance that this will have a sale potential of about 17 million square foot. However, as we are going more granular into planning of these projects, our estimate as of today stands at about 18.5 million. So almost 1.5 million square foot of additional planned area is something which we are envisaging out of the Sector 71 portfolio, which is without really adding any further land into this whole piece. So on the BD side, there's area getting added into Sona market as well as 71 by virtue of more refined planning. On the overall portfolio level where we stand as of today, we've delivered close to 16 million square foot. There's another 9 million square foot, which is getting close to delivery. The number was quite similar even at the end of previous quarter, but there were very heavy rains, in the previous quarter, which did impact some bit of the construction activity on multiple sites. Multiple times we had to, face, the rain fury, and, there was loss of momentum which happened at various occasions during the previous quarter. So by and large, we were at about 9.2 million of area which was yet to be completed. We are still close to about 9 million. at which we are, at good stage of completion. But yeah, our target is to kind of, complete and hand over these sites on an as early as possible basis. But besides this, if we look at the inventory which we've launched in the recent months, so we got publicly listed in September 23, and since February and March of 24, we've been, launching newer projects on a very sustained basis. And if we cumulatively look at our launches and hence, the inventory which we've launched, where bulk of the cash flows are yet to be received, we've launched close to 17 plus million square foot since February, March 24 till about September 25, which has a GDV potential in excess of 234 billion. Bulk of this inventory has been sold, as a guesstimate, more than 180 billion out of, inventory out of whatever we've launched has been sold, and we'll have probably, inventory closer to about 50 odd billion, which is still unsold across these projects, which have been launched since the earlier part of previous year. So effectively 80% plus, sales have been achieved. But more importantly, if we look at projects which are nearing a launch, like 8 million is something which we are about to launch in the coming, 3 to 4 months. But cumulatively, there is almost like 24 million square foot of development potential of land-based inventory which we are sitting on. Now, this forthcoming launch inventory has a GDV potential in excess of 420 billion. So if we bucket forthcoming and recently launched projects, there's almost like 42 million square foot of developable area, which we are bringing to a launch stage at a very good pace, and it adds up to a GDV potential of more than 650 billion INR rupees. And see, our thesis of the company has always been to, do a fast churn on inventory. The idea of buying any land is to bring it to development stage on an early basis rather than holding up any land stage inventory for next 5, 6, 7 years or 8 years. So whatever is pending after launching this 8 million, is something which we will launch, within next 2 years itself. So against this, massive forthcoming and already launched inventory, which exceeds 650 billion INR, there's a net debt which is quite modest, which is by and large range bound, but yeah, less than 10 billion. So about 9.7 billion of debt is something which is still in the company. And over the coming 12 to 15 months, we do see that this net debt will come down to a zero level. Like Pradeep also mentioned, just a bigger transaction which we did on the debt front was raising NCDs, where IFC subscribed to all of those NCDs. Almost 100 million equivalent was raised. So this is a new tap, a new manner in which we've accessed, listed non-convertible debentures, which is first of its kind for the company, and we were rated A+ stable by CARE Rating Agency. Just a quick impact on the revenue recognition and the guidance fronts. So during the first half, we've done recognition of about 12 billion. Our GP margin stood at about 29%, which is much higher than the previous half, financial year's first half. The EBITDA margin dipped because of lower than anticipated quantum of revenue recognition, but we do intend to make it up during the later part of the year. We've over span of time, we've been working with good quality contractors. We've onboarded contractors like Ahluwalia Contracts, Capacite, Arabian Construction Company. But just as an additional layer of, efficiency improvement, we've also now onboarded Bain & Company, which will further, help us in improving construction-related efficiency across various projects which are nearing completion. So, over the next 18 odd months, I'm not being very specific with timeline here, but yeah, let's say over the next 18 to 20 months, our target is to complete almost, inventory worth 10,000 crores. So that's the precise mandate which we've given to Bain & Company to, work alongside us so that, these projects get completed in a timely manner. Just to complete, and as a last note, we stand firm on our guidance on launches of 170 billion, on sales of 125 billion, on collections of 60 billion, and revenue recognition of 48 billion for this financial year. Thanks a lot.
So are we good to go for the questions?
Yes, please.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Pritesh Sheth from Axis Capital. Please go ahead.
Thanks for the opportunity and good afternoon, team. First is on the launches, 8 million square feet you talked about. While you said 6 million square feet in 37D and 4 million square feet in Sector 71, that's a massive supply, for that market at one shot. So how are you planning to phase this out over the next 6 months or couple of quarters? That's my first question.
Sure. So Pritesh, see, the critical aspect for the company is to bring any land stage inventory to launch stage, because there's a lot of planning and, approval related activities which need to be completed. So when we are saying there's land stage inventory, which is roughly 24 million square foot, the good part is that almost 2/3 of it is coming to a launch stage just within the span of next 3 to 4 months. So that really makes a lot of shift in the quality of land stage inventory, which is there with the company. Also, Pritesh, we do intend to do the construction of these large projects at one go. So we'll not go tower by tower. So, we'll hand out construction contracts at one go, because we are very comfortable with the current financial position of the company. And, we do intend to do the construction of these projects, at one go. These will not be phased, over multiple phases. As far as sales are concerned, see, there is not much new sale coming in the Sector 71 market. So we are amongst few large supply creators in the Sector 71 market, and hence we are very, positive as far as the sales offtake is concerned. And even on Dwarka Expressway, the way the entire infrastructure is concerned, see, we've done large scale projects in the past. So we may do some cosmetic sort of phasing is possible, that, we may launch X number of units first, which would be reasonably large, and we do a second small phase within a short span of time. But it's fundamentally, this is one project. This is not like, project which has to be launched across multiple phases over, let's say, 12 or 18 months. We'll, by and large, besides some marketing optics, this will remain one single project.
Got it. So 4 million square feet from Sector 71 and another 4 from 37D is how we should look at in terms of launches in second half.
Yes.
For now. Okay.
Yeah.
Got it. Time.
Pritesh, just to add on, see, what we've also done is that in general, the pricing in the market's gone up. See, the simple reason is that while projects have been launched, in these middle income, category, a lot of inventory has come in the upper mid segment. But what we've really done with both of these projects is to, launch projects, around, 1800 odd. So earlier, let's say, if, launches were being done with an average size of about, 2200, 2300 square foot, we are now launching projects with starting apartment sizes of about 1800 odd square foot. So we've tried to ensure that the ticket size remains attractive and, it's affordable for the end user to participate in these launches.
Got it. Just a couple of follow-ups on this, right? You mentioned that amongst the inventory that we've launched since Feb 24 till now, there's 5,000 crore worth of inventory which is left in the project. If you can split that up between Sona, SPR, and 37D, that would be helpful. And looking at the last launch that we did in Sector 71, which was also not a sellout, right? We sold like 55-60% worth of inventory. How are you expecting the velocity for these two launches? While you said, financially you are okay. You are well strengthened to manage such a large scale construction. Is your underlying assumption that probably construction spend would be ahead of collections, and we are okay to take some debt if needed, but we want to go with a large size launch in the market?
So, Pritesh, I hear you, and there are like two broad questions that, if there's inventory worth 5,000 crores, why are we doing these larger launches? And what is the nature of unsold inventory which stands in the company right now? And thirdly, you're talking about financing of these projects, correct?
Yeah.
Yeah. So see, as far as the unsold inventory is concerned, if I have to categorize it basis the nature of the development, then in the group housing or high-rise, apartments, there is about, you could say, 2,800 odd crores of inventory which is still unsold. In the mid-rise or low-rise floors, there's about 850 plus crores of inventory, out of which certain floors are blocked as well. It's not that we've opened up all floors to sale and hence that inventory is lying. This is primarily induction. There are certain floors which are yet to be opened up for sale, and hence this inventory, while it's getting counted as unsold, we've not launched it as well. And then there is certain, plots, industrial plots, both in Dakshin and City of Colors, which is worth, let's say, 750 plus crores. So this is bulk of, the inventory which is yet available with the company. But there's a gap between what is with the company and what is getting launched. Amongst the group housing, there are still a lot of, apartments which are larger size. Like Titanium, we were doing apartments as large as 3,600 square foot. There were quite a few penthouses, which are there in each of those towers. So, the inventory which is left out will also comprise of these, larger sized apartments. What we currently intend to do and launch is inventory which is smaller in size and hence more affordable for the buyer to, participate. So that's on the, inventory side. And see, we've always maintained that creating supply is a very challenging task. It takes its own incubation time, line, effort, and capitalization. So in the housing market, the bulk of the capitalization does take place while you are acquiring land and seeking approvals on those land parcels. Demand side, the reason why I brought up the cumulative sales, the reason was that since February or March, whatever we've launched, 80% plus has already got sold. And when we are doing these larger launches, see, the intent is that, it can get consumed over a, 12-15 month period. The intent is not that, as we launch, it all gets sold. But at least we've cleared a big critical milestone of creating that supply, So that's what I would, suggest that it gets rightfully, understood. As far as construction is concerned, see, there has in recent past, we've not seen a situation that, we've launched something and we've not achieved financial closure basis the sales getting made. Having said that, the overall cash position of the company is quite strong. Whatever projects are getting completed are throwing up cash, and that's why, the net debt stays where it is. If you look at the last 2 years, ever since we got listed and till date, I can share those numbers separately, but our portfolio has risen dramatically, and the net debt is constant. So let's say the company has grown, 2x, 2.5x in terms of portfolio size, and the net debt remains the same. That clearly indicates that a lot of it has been funded out of organic cash flows. And we also did one round of, fundraise from the markets, and we've never had that intent of, going again, and there was no need to kind of, raise further equity money from the markets, which still remains the situation. But we are confident of, achieving good sales and these projects funding their construction on their own.
Got it. That answers largely. And just to, you mentioned that, you are preparing these projects to sell within 12 to 15 months. So just to clarify, will that be your underlying assumption that, whatever we are launching, we are able to sell in 12, 15 months? That should be a good number to achieve.
There are two sets of lines, Pritesh. There is launches which are being done, and there are, absorption which happens, over a span of time. This is real estate, and it should be, and this has been the assumption. See, maybe last year we launched 1 or 2 projects where just at launch we managed to sell everything. But, that can't be the assumption from a company perspective. We've always supposed to, plan for a more pragmatic sales scenario that, as we launch, since these are, this is inventory worth 2.5, 3 crores, 3.5 crores, it will take certain time for it to be consumed. But since, we're launching it as a single phase, you can also appreciate that we are confident that, all of this is getting sold within a finite span of time.
Yeah.
Exact number of months, no one knows, but yes, this is definitely, we are very positive that during the second half, we'll be able to achieve good sales and, meet up our annual guidance.
Sure, got it. A few more questions, but I'll jump back in the queue. Thank you.
No stress, Pritesh. Thanks.
Thank you. We would like to remind our participants, if you wish to ask your questions, you may press star and 1 on your touchtone phone. The next question comes from the line of Saishwar Ravikar from ICICI Securities. Please go ahead.
Hello, team. So my question is like the ongoing portfolio is heavily dependent on affordable and mid-income housing. So while forthcoming pipeline emphasizes on group housing and premium segment. So my question is basically like how does the revenue recognition profile will evolve in upcoming fiscals when this project will complete? Since the absorption rate definitely change. So if you can guide us.
So, see, there is almost 9 million square foot of inventory which is coming to close over the next 5 to 6 quarters. Then some of our newer projects had mix of both plotted developments as well as low-rise developments. So in both of our large projects, like Dakshin is almost 125-acre project, where this in between 1,500 to 2,000 crores, worth of plotted development which we've sold. Likewise, in City of Colors also, it's a large township with a lot of plotted development. So in the manner of completion, we'll first see this 9 million plus getting completed. Then there are these, developed plots which are kind of getting completed, and hence, that revenue recognition will kick in. Post that, there are more than 2,500 low-rise floors which have been launched and bulk of them sold in the project Dakshin. So that is, that will get completed. And post that, some of these group housing projects which we've launched over the last, 15, 18 months, they will also come in queue of completion. So it's not that we are only relying on group housing projects and hence the revenue recognition, is getting pushed by many years. So there is multiple inventory and every year, we'll see a mix of that getting completed. Lately, you'll see the pattern in revenue recognition and profit margin. The portion of middle income home completion is getting higher and hence the GP margin is improving. So if we do a like-to-like comparison with the previous year, our GP margin gone up to 29% versus 23%. The simple reason is that the proportion of low-rise floors has increased versus affordable housing projects. And we are now left with, 5 or 6 affordable projects which are kind of getting delivered over the coming quarters. And hence, once they are done, all the balance completion will have a very strong, GP margin accruing against those projects.
Okay. One more question. One of your peers, you must have heard this, one of your peers has taken entry in the Mumbai market. So you are also thinking for expansion, like geographic diversification?
Market.
No plans as of now. So, we wish best of luck to everyone who's entering new markets, whether it's, people from NCR going to the Mumbai market or, other players coming to the Gurgaon market because, there is huge scope. The fundamental simple, each of these geographies have like a country-sized population. For instance, NCR in itself has close to 40 million people. So there is massive amount of work which is there for all organized players. And if you see it as a theme, as an industry over the last, 4 to 5 years, growth has been consistent across board. Balance sheet position has improved for multiple peers. And I think people are seeding newer markets. We still are focusing on some of these larger launches in our, in our key market. But at future stage, once we are close to entering any new market, we'll keep everyone posted about it.
Okay. Thank you, team. All the best.
Thank you very much.
Thank you. Before we take the next question, we would like to remind participants, if you still wish to ask your questions, you may press star and 1. The next question comes from the line of Pritesh Sheth from Axis Capital. Please go ahead.
Yeah, thanks for the follow-up. So just a couple of questions on the cash flows overall. So we have done collections of 1,900 versus guidance of 6,000 crore. If I look at your presentation, we have pending collections of 2,200 crore from the ongoing projects. Another 18,000 crore worth of inventory you have sold from inventory launched since February 24. And then you have, another 12,000 odd crore of sales expected in second half. How would you bucket your balance collections in these 3 categories, ongoing, recently launched, and upcoming, so that, we can build that confidence in the numbers to come in second half in terms of collections?
See, from an overall perspective, Pritesh, ongoing and recently launch will give us numbers anywhere between 4,000 to 4,500 odd crores, whereas 1,500 crores will come out of, the new, the launches, for the year, where if we look at the overall numbers, we've done about 20 to 23% of GDV terms launches as yet. Q1 we had done, project in Sector 71. Q2 there was no launch, but Q3, Q4 we are planning 2 large launches. So about 1,500 odd crores is expected out of new launches, whereas about 4,000 to 4,500 anywhere in that range is expected out of, the existing set of projects. So that's our, plan for the year.
Sure. And bulk of that till now, 1,900 crore has come from ongoing and recent, while new launches, obviously there was a large launch in first quarter, that would have contributed, 500 crore till now?
Not 500 crores. I think that's not the number which has come as yet. But as of now, out of this 1,900 plus crores, 1,960 odd crores, you could say about around somewhere in the range of 85 to 90% has come out of the erstwhile inventory, whereas you could say about approximate 10%. We can share the exact number. Between 10 and 15% come from newer launches. But as these launches mature over the span of time, that's when I'm saying that overall, about 25% of the overall collection is expected from the newer launches.
Got it. And in terms of the spending for construction, you expect these numbers to remain same in second half and probably ramp up next year with the launches that we'll have in second half. So how will you expect the overall construction spend for this year and OCS generation in this year?
So construction will go up, not in a massive way. We spent about 900 plus crores during the first 6 months, 940 odd crores during the first 6 months on construction. I think that number should be between 1,000 and 1,100 for the second half of the year. I don't think it will cross 1,200, but it should be in that range of 1,000 to 1,100 crores for the year. So with enhancement in collections in the second half, a lot of it will trickle down to the operating cash surplus for this year.
Sure. Got it. That's really helpful. Thank you. That's it from my side. All the best.
Thanks, Pritesh.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management of Signature Global India for closing comments. Over to you, sir.
Yeah, thank you everyone for joining today's call and taking out time. Thanks a lot.
Thank you.
Thank you.
Thank you, everyone. Thank you, sir. On behalf of ICICI Securities, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.